Let's get in an international perspective at this juncture. Joining us right now, we've got Mark Galasiewski, analyst at Asia Pacific Elliott Wave International, who is joining us from Georgia. Mark, good to have you on the show. Place your bets with Ashu Dutt this morning. Really, what do you make of the markets scaling those landmark levels back home, 20,000 and 6,000 for the Nifty? Because we can't really ignore the fact that those niggling problems such as, rising inflation and also interest rates spiking up seem to be plaguing the markets as well.
Okay, well, here at Elliott Wave International, we talk about price waves, and we talk about each market individually. We don't consider other, what we call fundamental factors, such as inflation or government behavior. We simply look at the markets by themselves. And what that's showing, I can give you a short-term call here, the blast up that we've seen this month since the late August lows is a third wave within a five-wave advance. So the wave started in May. We had one wave up until July, a sideways movement into August, which was wave 2, and now the third wave up. There will be eventually a fourth wave, which is a sideways correction, and a fifth wave up, which will probably take us to new all-time highs. So I really can't, because this is our methodology, I can't address any discussions of inflation or government behavior, or even, as we were just talking about earlier, I hear domestic investors and foreign investors, because all of that doesn't matter from our perspective.
Right.
Well, it can go as high as it wants to go. It can certainly extend, and that is common within third waves. It's frequently the longest of the waves. So right now we're seeing that it hasn't even exceeded the length of wave 1 so far, so it has a little bit more to go, even in the short term. Beyond that, though, certainly, a conservative estimate would be new highs by the end of the year. And it could happen. That could happen in the next month, for all I know. Unfortunately, we can't. We have to wait and see the structure of the advance, and then we'll know when we get on top of it that we're at the end or close to it. But it's difficult to say when we're right in the middle of it, which is where we are right now. I would say by the end. I mean, conservatively, by the end of the year, we'll make new all-time highs. Mm-hmm. And that's just 6% above where we are now. So I know that's very conservative, but realistically, I think that's all I can say. Mm-hmm. Because if we get a correction that goes down from here a little ways, and we go sideways for a month and a half in a fourth wave, and then up in a fifth wave for a month and a half, we're at the end of the year. I guess I would have to take issue with your statement that the Indian market is behaving differently than other markets. If you're talking other markets such as developed countries like the United States, I'll give you that. But if you look around, you've got Indonesia nearby. You've got even Sri Lanka, which is off the charts. You've got Malaysia. So many emerging markets, particularly in Asia, but also in Latin America, are actually resemble each other very much. So, in fact, they are behaving exactly as we expect. We make a distinction between many of the developed markets, which bottomed in 2009 in 5 waves down, therefore showing more weakness, and have since rallied in 3 waves, and then the emerging markets, which bottomed not in 2009, but in 2008 in only 3 waves down, and have since rallied strongly in 5 waves. In fact, India is near all-time highs. You've got many emerging markets that are at new all-time highs, while the developed markets are struggling. So you really can't compare the two, and it's not appropriate, because one is in a secular bear market, that's the developed, the West in particular, but also Japan. And then there's the emerging markets, which are in secular bull markets. And so I would, your benchmark should really be something like an emerging market index rather than the Dow or the S&P 500. Sector calls. Again, sectors are going to shift constantly. What I'm liking right now is the IT. If you look at CNX IT or the BSE Infotech Index, these are very powerful moves that are happening right now. They're actually in third waves from the 2009 lows. So these are very strong markets, and again, this is to give your viewers another perspective. A year and a half ago, at the March 2009 lows, we put out a report forecasting a 15-year bull market in India. And if you look on the Economic Times website and scan for my name, you'll find a forecast of 100,000 in the Sensex. So again, this is and this is based on long-term patterns that we observed back to 1920. This is obviously not the Sensex, but this is data, this Indian stock market data that we have back to 1920, and that is clearly showing that this is a multi-decade bull market, and certainly in the short term, a multi-year bull market. So this is not a time to even worry about sectors. This is not a time to even trade. This is a time to buy something and hold it, and enjoy it, and sit back and maybe even get another job, a job that's out there contributing to the to the economic growth in India, because it's a wonderful bull market story, and I hope to be with you the whole way as we go.